Hi, my name is John Gillespie and welcome to Exam Question Solutions for ACCA 5 Performance Management. Today's topic, we'll have a look at a throughput accounting question, syllabus part A of your paper. The question name is Thin Company and the exam date was June 2011. A copy of this question is available on accaglobal.com, and I should advise you to get that question so you have the copy to follow along with this video tutorial. In relation to throughput accounting, the examiner, Anne Irons, has written 2 articles on throughput accounting in November 2011 and so is therefore quite keen on the subject. And it's possible that another question in this area may be asked. Okay, so without further ado, let's go on and look at the question itself. This is the exam paper from June 2011 that you'll find on the ACCA Global website. And scrolling down, we get to question 5, the question on throughput accounting. Now, the approach to all questions, you see this one has got a page and a half of information for you to get through. But before we get into all the detail here, this common approach is what we want to do. So firstly, maybe look at the first sentence or two to get an idea of what's going on. So Thin Company is a private hospital offering 3 types of surgical procedure known as A, B and C. So without going any further into the detail, we'll have a look at what the requirements are. Very important to tell us before we read through the detail what it is we might be looking for. So part A asks us to calculate the throughput accounting ratio for procedure C, one of the procedures mentioned in the first sentence, and that's for 6 marks. We can allocate our time based on that. Part B, looking at the requirement in bold, is calculate the optimum product mix and the maximum profit per annum. So this tells me just from reading that there is an optimum product mix between the 3 products, and as usual in these types of limited resource questions, it would suggest that we don't have enough resources to satisfy demand for all of the requirements. And the third part C, also for 7 marks, is asking you to discuss the overall profit of the company. Discuss whether the overall profit of the company could be improved by equipping and using the extra theatre. Now that doesn't mean a whole lot to us at this stage, but we know it's a hospital and there is a suggestion here that we may be able to get some additional resources. So with that information in mind, we can now go through and look at the question. In terms of looking at the question, it looks as if it's a throughput accounting question, throughput accounting ratio calculation for procedure C. So that's where we would start. Okay, so going back to the question there, we see the information. So you would read through that. You'll see that the company currently rents an operating theatre from a neighbouring hospital. Thinco does have an additional operating theatre on the premises, but it has never been put into use since it would cost a further $750,000 to equip. The managing director of Thinco is keen to maximise profits and has heard of something called throughput accounting, which may help him to do this. The following information is available. So the information there tells us all patients go through a 5-step procedure, and the 5 steps are given to you there. One of those steps may well be and should be the bottleneck. Throughput accounting is all about maximising the throughput from a particular operation, and so maximising the throughput through a bottleneck resource. The price of each procedure, A, B and C, is given to you there, so that's the sales price. The only materials relating to each material in the procedure are preoperative injections given by the nurse, the anaesthetic and the dressings, and these are as follows. So that's the material costs for each, and so based on the selling price and the material costs, based on those two, we can calculate the throughput per procedure, or throughput contribution. Throughput accounting is very like marginal costing. and that in that the difference being that the only variable cost that we've got are the materials. So throughput, or also can be called throughput contribution, is equal to sales revenue minus material cost. All other costs are deemed to be fixed in the short term. Okay, so step 4, we've got some information about 5 members of staff employed by ThinCo. It's a standard 40-hour week for 47 hours per year. So that's a total of 1880 hours. 40 times 47 is 1880 hours per annum. And the salaries are as follows. So there's salary costs, labour costs, so advisor, nurse, anaesthetic, surgeon, recovery person. So all of those costs are deemed to be fixed. They're labour related costs. On the other hospital costs, comparable to factory costs that we're told here. So we're looking at an application of throughput accounting to a hospital environment as opposed to a factory. So therefore, in a traditional manufacturing environment, the only other costs are overheads, which include theatre rental costs, an amount of 250,000 per annum. Now we have information on the maximum demand for A, B and C, 600, 800, 1200 procedures respectively, and the time spent by each of the 5 different staff members for each procedure is as follows. So procedure A, and we've got the time per procedure for each of the 5 people involved in the process. So looking at that, we can see which particular procedure takes the longest time, which particular part of the process takes the longest time for each procedure, I should say. So here we've got procedure A, and just scanning down you can see that surgeon time at 0.75 hours per procedure is the slowest, or that's the bottleneck for A. For B, it's the same, it's the surgeon time, so 1 hour is the highest, and for C, it's 1.25 hours for the surgeon. And so again, that's the bottleneck resource for procedure C. So we've got 3 procedures. The bottleneck resource is the surgeon. Part hours are shown as decimals, so 0.24 of an hour, we're told, is that number of minutes. Surgeon hours has been correctly identified as the bottleneck resource. Okay, so that's the bottleneck resource. Another calculation we could do here is to actually multiply the time for each procedure by the number of procedures to get an idea as to whether or not we've got capacity constraint or not. And if you work that out, you'll find that you haven't got enough hours for the surgeon to meet the full demand. We have enough time for the other particular process steps, but we'll come back to that one in a minute. Okay, so that's what it is. So first thing, calculate the throughput accounting procedure for C. I beg your pardon. Calculate the throughput accounting ratio for C. Okay, so what is the throughput accounting ratio? And this is a formula that you'll need to know. So the throughput accounting ratio, okay, is equal to the throughput per factory hour. In this case, we can change that to hospital hour over the cost per factory hour. Okay, so that's the gives us the throughput accounting ratio, and that's what we're asked to calculate. Now we've just been asked to calculate it in relation to we've got 3 procedures. We just need to do it in relation to part C. So looking at that, how do we actually calculate that? I'm going to do it in terms of part A and B. That's not required in the question, but just so that you see where the figures are coming from and how the question has been shortened, it's worth just working it through in the full way. So the first thing we want to calculate is the revenue, or the throughput. So the revenue for each one is going to be 2,700, 3,500 and 4,250. So that's that. And now the material costs. Material costs. The material costs are given to you in the question there. So just looking at the question, when we go to the question here, you can see this section here shows you the material costs. So I'm just going to total all those up in the answer, but you could show them as each individual one. So for procedure 1, procedure A, we've got 700 plus 35 plus 540. So material costs here are 740.60. For the next one, 845.60. And for the next one, the one that's required, so that's going to be 1000 plus 45 plus 45 plus 4.6, so that's 1050.60. That means the throughput, TP, throughput contribution, I like to call this contribution so we sort of get a feel for that. It can be called throughput contribution. So there, working backwards, this is 3199.40. That's actually all that's the calculation that's required, but let's continue through. So this one would be 1959.40 and 2654.70. 0.40, sorry. Okay, so that's the throughput. Now it's throughput per factory hour up here. So what we want to have a look at is the hours on the key resource, or the bottleneck. Hours on, let's put in bottleneck, hours on bottleneck resource. Okay, so here we've got 1.25, here we've got 1, and here we've got 0.75. So continuing with that then, our throughput per hour is going to be 2612.53, 2654.4, and 2559.52. So that's the top part of the equation. So for C would be equal to 2559.52 dollars divided by another amount. So let's have a look at that. And the other amount is the I need to have a look at the cost per factory hour. So the cost per hour, per hospital hour, what might that be? Well, let's just come down here a little bit here and have a look at that, because what we've got is we've got our staff costs. So remember, all costs other than material are considered to be fixed. So the staff costs here will be 45,000 plus 38,000 plus 75,000 plus 90,000 plus 50,000. So that comes out at 298,000. And then we're told that we have other costs in relation to the rental of the theatre. So that's coming out at 250,000. Add those together and we get 548,000. Okay, so that's the costs, total costs. We need to divide that by 1880 hours. So that's 47 weeks times 40 hours. So that's 1880 divided by 1880, and that gives us 291.49. So that's the cost per hour of key resource, REORCE. Okay, so that's the cost per hour. So we know the throughput contribution per hour. So the cost per hour, 291.49, 291.49, and 291.49. Okay, that gives us the throughput accounting ratio. The throughput accounting ratio then is 8.61, so that's positive, 9.11, and 8.78. Okay, so this question here, all that's actually required for you to do would have been just that part. Okay, you wouldn't have had to do the other bits. I've just done that for completeness, because it would be common that that's what you would need to do. So the answer for part A is that, 8.78. Okay, so looking at part B of that question, we can see that what we're told is the return per factory hours for products A and B have been calculated as 261.53, which is what we've calculated there, and 2654.40, which is that figure there. So that's where those figures came from. And the throughput accounting ratios for A and B has been calculated at 8.96 and 9.11. So what's happened here is that in order to reduce the marks available for this first part, what the examiner has asked you to do is to just concentrate on C, and he's given you the other information. Okay, so we see where that is. What we're asked to do here is to calculate the optimum product mix and the maximum profit, therefore, per annum, based on those figures. Okay, so the first thing we need to know is how many of A, B, and C are we going to do? And because we've got these particular figures, we can rank these in terms of profitability. So our ranking would be, the most profitable procedure is B, so that would be 1. The next profitable procedure is A, 2, and the least profitable is 3, or is C. So that's how we can use the throughput accounting ratio. Okay, so that's the TPAR, the throughput accounting ratio. And so we use that information to do part B of the question. And part B is fairly straightforward then. So we want to have a look at part B, the optimum plan from a profitability point of view. Okay, so the way we do this, as in contribution per unit of limited resource questions, is we want to look at the hours available. So total bottleneck hours available. And we know that that's 880 hours. Okay, that's hours. So the first thing we want to do is, first we'll do, as B is the most profitable, we want to do the most of those particular ones. So we'll do, okay, 800 B at 1 hour. Okay, so that would be 800 hours comes off there, which leaves us at 1080 hours. Next what we want to do is 600 A at 0.75 hours, and so that multiplies out at 450 hours. So again, reducing that down, that leaves us with 630 hours remaining. So then we'll do C at 1.25 hours. Now, how many procedures can we do at one point in that time? And so it's obviously going to be 630 divided by 1.25. Okay, that's the calculation. 630 divided by 1.25, and we can do 504 procedures, and that would use up all of our time. So we can go through it in that particular way. So the optimum plan is to do 600A, 800B, and 504 of the less profitable C. That gets us to our optimum plan. Okay, so looking at the profit calculation then, so we can say our optimum plan A, B, and C. Our optimum plan is going to be 600, 800, and 504. That's the optimum plan to maximize profits. Okay, so if that's the plan, then let's have a look and see what the contribution would be. And so the throughput contribution for each of these is, well, that's going to be 1959.40. This one is 2645.40, and the last one is 3199.4. So even though the contribution on C is higher, the throughput contribution per unit of limited resource is not. So that's the thing there. So total then, we just multiply that out. So 600 multiplied by that is equal to, so we've got 175, 640. So in this one we've got 1, 2, 3, 520, and this one we've got 1, 6, 1, 2, 4, 98. So we're just multiplying those out there. So in terms of the total then, that comes to, so that plus that equals, we've got a total throughput contribution from this plan of 4911,658 less our total hospital costs. So that's our TFC. Excuse me, I'm just putting it in there. So that's the usual terminology that's used. We calculated that before, 448,000, which gives us a profit of 4,363,658. So that's the profit. Okay, so there's the optimum plan and the total profit. Right, so that's that. The last part of the question asks us, part C, we're asked to discuss whether or not the overall profit could be improved by equipping and using the extra theatre. Now we're told in the question that we would need to hire another surgeon to do this, so that's an additional cost. So clearly what we have is that if we had the extra theatre, we would be able to, at the very least, satisfy the extra demand for C. So what we discuss is with the extra theatre, we can satisfy extra unfulfilled demand for procedure C. Okay, so that's equal to the total minus 504, total demand 1200 minus 504 is equal to 696. Okay, so if we did that, then clearly we're going to have some additional additional contribution. So is it worth our while? So additional throughput contribution. So that's equal to 696 multiplied by 3199.4. Okay, notice our revenue costs and our material costs are the same. So the throughput for C is that. So working that out, we would have an additional contribution of 2,226,782. So now what we need to less our costs, and so what we have is the surgeon. Now additional surgeon. So additional surgeon is going to be 250,000. Sorry, 90,000. And equipping the theatre is 750,000, we're told. So there's the additional costs, a total of 840,000, and what we've got then is an additional contribution, an additional profit I should say, of that. So the discussion therefore is along the lines that if you equip the additional theatre, then you'll have additional costs of 840. The additional contribution from the unsatisfied demand is going to be the 2,226,782. That'll give you an additional annual profit of 1,386,782. So therefore on financial grounds it's well worthwhile. And of course the other benefit is that in the next year equipping the additional theatre cost of 750 will not be required again. So therefore in the second and subsequent years this is going to prove a lot more flexible. Other non-financial consideration is that this additional surgeon, his work will not be fully used up, so therefore the possibility to use the theatre to offer additional procedures would also be available, and you can calculate what that might be. Okay, so you could review the answer to that question on acca.com, and hopefully that has given you a view as to how you would use the throughput accounting ratio in order to come up with an optimum production plan, and allows you to calculate optimum profit for a particular procedure. Thank you very much, and please look out for other exam question solutions that I will be putting up on YouTube. Come on, stop.